years after the global downturn, the IMF says the world economy continues to expand, growing about 4.5% in 2011 and 2012. But IMF chief economist Olivier Blanchard says the positive numbers hide a great imbalance.
If you look at the details, you find that for advanced economies, we forecast only 2.5% for each of the 2 years. And for the emerging and developing countries, we forecast 6.5%.
China's hot economy leads the way with 9.6% growth, followed by India with just over 8%. Blanchard says the threat to emerging markets is overheating and high inflation. But in the advanced countries, the threat stems from economies growing too slowly to bring down high unemployment.
For the recovery to be sustained, advanced countries must achieve fiscal consolidation. To do so and to maintain growth, they need to rely on increased external demand. Symmetrically, emerging market countries must rely less on external demand and more on domestic demand.
Blanchard says one way to rebalance the world economy is to allow undervalued currencies to appreciate faster.
Appreciation of emerging market countries' currencies relative to advanced countries' currencies is a central key to this global adjustment. It is not the only key, but it is a central key.
The U.S. maintains China deliberately undervalues its currency to give its exports a competitive edge. China says that's not true and argues that currency adjustments must happen gradually. But economists say a bigger threat to the global economy is unrest in the Middle East and the rapid rise in oil prices. Marcus Noland is a senior policy analyst at the Peterson Institute for International Economics.
That's probably the single biggest threat to the ongoing recovery, is that significant destabilization, taking significant amounts of oil off the market, could contribute to a much higher oil price and a global economic slowdown.
The European debt crisis poses another serious threat. But Blanchard says it's too early to judge the effectiveness of European efforts to stabilize economies in Ireland, Greece, and Portugal.
It is very important to realize that Ireland, Greece, Portugal have a very difficult macro and fiscal adjustment to make, which is going to take many years.
Complicating the world economic forecast is last month's devastating earthquake in Japan. The IMF has cut growth projections for Japan 0.2%, but says reconstruction efforts are likely to produce an economic rebound in the world's third largest economy next year. Arcega, VOA News.